What is up, everybody? So what we are looking at today is actually why stop losses are so vitally important, and this is one of the prime examples. This is a perfect example of why stops are so important. So what we have here is we have Intelsat. This is a very negative trending stock, and basically what we see is down here in this range, every single time we get a spike, right, we get a retracement back down. So what we noticed, I forget who in the chat and who on the team actually alerted this trade. But remember, what we have here is we have a team of traders, so everybody helps everybody out. But I don't necessarily remember who alerted it. But this was a very good potential short at the level right here at the 750 level. So basically you have that half number support and resistance. I prefer whole number support and resistance, but really this was the level. This is the level that we were looking at right here. Now, as this ran up, this was a very, very good potential trade. And at this level, at this double top, and you have half number support and resistance, this makes a very good play to the downside. So when we were looking at this, of course, we didn't have all of this. We were looking at it. We were watching this stock move up, and the play was to short it at the double top. Now, what I want you guys to notice is as this approaches the double top, what happens is we blow right through it. So let's say on this candlestick here, let's put you in our shoes. Let's say you were trading in our shoes. You were trading as a team member. All right, you're in the team and you're trading with us. Well, let's say you enter at the literally a perfect opportunity right here, right? We get very close to that 750 level, all right? Let's say you enter there, all right? That's good entry. That is a good trade in my book. And when I say enter, I mean playing this to the short side, right? So we're looking for a move. We're looking for a move down, all right? That's what we're looking for, because this is a very good area to short, because it has happened already once. You have a nice head and shoulders in here, and every single time this spikes, it tends to come down. So that would have been a good entry, all right? I would have said this is a good entry, all right? So remember, we're putting you in our shoes. We're putting you in the shoes of one of our team members in the chat room, all right? So you enter short here, all right? Two things can happen. It can either go in your favor or it can go against you. This is why stop losses are so vitally important. Right? Where should stop losses go? Stop losses should go right above that support, or excuse me, that resistance level, right? On the other side of resistance. So somewhere up there should be where your stops are. All right? Now, this is why, basically what I want to symbolize here is to show you what happens if you don't have stop losses. Some people trade, some new traders question why we should have stop losses. Why not just let it, if it moves against us, why not just let it come back to our entry point? Because sometimes, you guys, it doesn't. All right, so as this stock moves forward, it blows right past our short. All right, that's bad sign number one. All right, continues higher. So think about it. Think about it that you enter right here, which is literally the best possible entry point. In the 730s. That is literally the best possible entry point. That gives you the best risk reward, and that would have been literally a prime location to enter. You couldn't have gotten a better entry than right there. All right? So what happens? If you don't have stop losses, all right? Well, what happens if you do have stop losses? You put your stops up here, 675, 670. Or excuse me, 765, 770, somewhere in this range up here, right? And you lose 30, 40 cents. Okay? What happens if you don't have your stop losses? Within 2 days, all right, we hit 950. Within 2 days, that is like a 30, 40% loss. Okay? Think about that. Within a couple days, we're like 30, 40% loss on our position. That is terrible. These are why stop losses are so important. Not only that, that's within 2 days. All right? What about the next day? Okay, kind of bounces around. Pulls back. What is this? This is retest. Okay, retest. Now, I'm going to show you another level. Okay, so right here, now we start to get we start to get a red candle. Okay, so what I want to show you, again, this is also another place to take a short, because we see the rest of the chart, we say, this is stupidly overextended. All right, we're running to this $10 level right here. Okay, running to the $10 level. Let's take it short at $10. Okay. Take it short at $10. Two places that you're going to put your stops are either right above $10 or right above the highs. All right? So think about it. So we start to see this rollover, right? We start to see this reversal come in. All right. So we take the trade, expecting it to at least get into here, potentially lower. What happens? Boom! Again, completely slaughtered. That's a 30% move. Really, it's a 40% move in a single day. Okay, so 40% move in a single day. So once again, if we have our stops where they should be, which is either above 10, we'll make it green because I always say, right, if you're stopping out on the short, you're buying to cover, so it should be a green. Or you have it up here, okay? So the argument against stop losses is, well, I'll just wait till it comes back to my entry point. That's a bad idea, all right? You would rather lose a few cents than $3 or $4, all right? What happens if you continue to hold it, all right? Now we're starting to get this reversal. But at the very, very high, you're at $14 fucking dollars. Right? So if you take a short at 10, that's 40%. Once again, that's a 40% loss. Both of these are total from down here to up here. That's a 100% move in not even in half a month. Okay? So the next question is, well, why didn't you take it long? Because we can't predict the future, and we don't have to predict the future in order to make money in the stock market. We have to take setups that give us the best risk to reward possible and make damn sure that our risk management is in place. That's literally all this is. So, yeah, of course, in hindsight's 2020. Looking back at this, we could have taken this long, you could have made 100% return. But that's hindsight. When you're looking at it over here, when you're looking at it right here, which is where you're playing it, this looks like a short. Okay, this looks like a double top short. Yes, at the break of the double top, technically, you can take it on the long. Technically. You break a double top, you can take it on long. But when you look at the stock, this is a severely downtrending stock. And the call that was made by the team, and myself included, I agreed that it should have been a short. So the call that was made was a short trade. Okay, back at $10, the call once again was a short trade. All right, this is overbought. It's way overextended. That's a short trade. So, but what happened is it continued higher. All right, so what I'm trying to signify here is that you cannot let your biases control the outcome of your trades. You can't. You'll never be right 100% of the time. And if you think you know it all, you will lose money over the long term in trading. So make sure to use your fucking stop losses. For the love of everything that is trading, use your stop losses. All right? It will save you a lot of money in the long run. It is good practice in risk management. Use your stop losses. All right? Use your stop losses. If not, you lose 100% return sometimes. And that's the real big thing is when people say, well, why use stop loss? I'll just let it come back to my entry point. It works until it doesn't. A lot of things in trading are exactly like that. They work until they don't. Even strategies, right? That's why you have to constantly tweak strategies, and some strategies work better in trending markets. Some strategies work better in consolidating markets. Some strategies work better in bear markets or bull markets. So strategies have to constantly be tweaked and adjusted in order to keep its edge over the market. So a lot of things in trading work until they don't. So yeah, holding it without a stop loss and just letting it come back to your entry point works until it doesn't. And when it doesn't, it blows up your fucking account. So use your stop losses. Trade smart. Trade with remember, capital preservation should be the core of your entire trading strategy. Preserving capital should be the core of your trading strategy, not making a profit. That's where most people go wrong. That's where most people will mess up is, oh, well, I just want to make 300% return on one trade. That shouldn't be the goal. If that happens, great. But the goal should be capital preservation always. Capital preservation always. Capital preservation always. Always, always, always. Trade smart. Do not trade greedy. Do not try to, remember, and I say this to all of my traders. All of my traders, I tell them this. I say a single trade will never make you rich. But a single trade can ruin your trading account. Remember that this is a long game. It takes multiple trades to make return. It takes multiple trades to make money. Stop shooting for that home run and start shooting for those constant first base and second base swings. All right? If you get a home run, fine, but it should be not with the goal. It should be, the goal in mind should be, just like in baseball, the goal in mind is to get on base. And if you get a perfect setup and you swing and you get that home run, awesome. But the goal is to not get struck out. It's the same damn thing. It's the same damn thing. You think these professional baseball players, if they swing for home runs day in and day out, they're going to get struck out. And that's the same in trading. So capital preservation first and foremost. That wins the game. All right, you guys. This is Derek. This is Finance and Chocolate. Continue to trade smart. Continue to kick ass in the market. And don't get fucking wrecked because you didn't use stop losses. I will see you in the next lesson.